who's ever been hacked at home or lost an email account? We got too many hands. Excellent. Just a little bit about myself. I was a mechanical engineer out of NC State some time ago. Kind of transitioned in the insurance industry in a little wayward way, but ran R&D teams back when our only fear was Y2K. And we had SCADA equipment, which was supervisory control and data acquisition equipment, so it could remotely communicate. And that's all we worried about was what happens when it rolls the dial from 1999 to 2000. It's a different world now. It is kind of scary, and I'll talk a little bit about statistics there. I'm always a firm believer of design the system and implement the parts. So whether you're doing that from your intrusion protection or from how do I ensure this when it does happen, because it's going to cost you. So we'll talk a little bit about that, and then we'll talk about where do we go to get that kind of insurance, and what does that insurance do for me. So everybody knows about the large breaches we've seen over the past few years. Target has been in the news a lot, eBay, Home Depot, Anthem, Blue Cross Blue Shield, large issue there. By 2020, the Internet of Things will be 50 billion network devices. Staggering number. Dan mentioned about the breaches you heard publicly. In 2015, 800 were reported. Not talking about the ones that weren't reported. 169 million total records were stolen. And since 2013, over 3 billion records have been lost. The Identity Theft Resource Center defines breach as an event in which PII is potentially put at risk, either in electronic or paper. PII is personally identifiable information, and I'll give you a definition of what that is. Here's kind of the biggest dollar hits, what's happening in the world and where they're coming from. Look at the bottom. Dan had numbers on there about 65, 80, high percentages. 71% of all organizations have experienced a cyber event, whether it's an email, a true intrusion, ransomware, blocked site, etc. It's all happening. And everybody knows your colleague in the cubicle or the office down the hall, they just got hacked and IT needs to run in there, disinfect their computer. Hopefully they had the backup from today or yesterday and not last month. And put themselves back. But malicious code is the biggest offender from a dollar standpoint. Denial of service. So if your business is dependent on your system being up and running to conduct business, if you're down, it's going to cost you a lot of money because people aren't going to buy it from you because they can't. They go somewhere else. Phishing and social is 12%. And here's the one that's interesting. 11% are malicious insiders. Highest dollar hits. Over 10% are people in your own organization. Maybe they didn't get that raise. Maybe they didn't get that job interview that they wanted for the next position. So from a quantity standpoint, externally, we're being attacked 56% of the time. Accidental and thieves, 24%. Accidental may be, oops, we just didn't think about that. Employees are 16%. And this number here at the end, state and hacktivists, 4%, you're going to see that number going up. Dan mentioned that earlier, that the outside intrusions from not in this country is going to happen more and more. So when you look at that, every 2 seconds a new code, malicious code is created. There's 30,000 of them a day, and 80% of them affect legitimate sites. So you got to be real careful. So Cyber 101, we're breached. What do we have to do? Well, by law, in 46 states, you must notify the victims of the data breach. California has just enacted legislation that requires you to also pay for credit monitoring. Everybody pretty much will do that anyway, but they're required by law in California to do that. And these states, I'm sure, will fill in. It's just a matter of time. And what's personally identifiable information? It's your someone's first name and last name or first initial, and any one of the following. Either a Social Security number, a driver's license number, an account name, password, credential, and then for the medical providers here, it's medical information in electronic or physical form. Just because it's not on your system in a digital form doesn't mean you're liable if somebody were to break in and steal records from a information standpoint. So what's the big deal? Well, the big deal is if you get breached, it's going to cost you money, time, and reputation. From a money standpoint, the cost to notify and monitor someone's credit for a year is approximately $170. You'll see 140, you'll see 280. I'll give you an example in a little while, but at $170 per record, 1,000 records is going to cost you $170,000 to provide that service to who was affected over a year. Drill that up to 30,000 records, it's $5 million. So do the math. If you've got 60, 100,000 records, the numbers get staggering. And your current insurance policy on general liability does not pay for that. It's specifically excluded. General liability is property damage and bodily injury to others. No mention about financial harm. So that's why cyber liability is becoming very important. So the carriers that are out there, and there's 50-plus carriers right now that write cyber liability, they're very interested in it because only 10% of all companies are currently buying it, which means 90% are not. So it's a great target for them from a growth standpoint. Some exceptions to that 50 I mentioned of carriers is healthcare, large retail operations, payment processors, municipalities. They're more of a targeted class for these hacktivists and people trying to get in. So the cyber liability policies are a little bit more underwritten. In other words, they're going to look at you a lot closer. And there may be fewer than 50 that will look at you depending on your limits. And the way they are able to provide these products on a daily basis is they have what are called sublimits and deductibles to manage their exposure. And we'll talk a little bit more about what that means to you if you're looking at a policy. So if you're a small business, say less than 100 employees, you're going to see prices down on cyber and coverages up. If you're a medium-sized to large business, it's probably not as expensive as you might think for cyber liability insurance. Pricing could be from $2,000 to $10,000 for $1 million or $2 million limits, but it's exposure-driven. So if you're a manufacturer, you might have 5,000 customer records. If you're a restaurant, you might process tens of thousands credit card transactions a year. Two completely different animals from an exposure standpoint. Because remember that $170 per record. So you got a bigger risk, you got a bigger payout if something bad happens. So what are the cyber policies available? They're typically called cyber towers. It's kind of a cool term in it. So we've got errors and omissions, media, network security, and privacy. The two on the right-hand side here are more driven towards companies that provide services. Like errors and omissions are typically it's going to be third party. So you're a software company, you develop something and you give it to a third party, and inside of that code that they bought or that service that they bought is a glitch, an error, an omission, not willfully, that occurs that hurts them, and they come back to you for monetary damages. Media is if you're in the advertising or media sector and you're providing information, developing websites, for instance, things like that, or you hold intellectual property like patent information, like a lawyer's office, for instance. You'd want to have some coverage there. On the right-hand side, the two other towers, we have network security and privacy. So if you're breached, network security means unauthorized access, malicious code, cyber extortion, and business interruption, which is really important because if you're down and can't perform business, or your clients can't perform business because they're down because of your software, that can get huge. And then privacy is what we talked about earlier, letting people know their PII has been exposed through a hacker, a lost device. Yeah, you set your phone down somewhere and went back to the restaurant, it's gone, too late. Rogue employees, and of course, physical records. So I mentioned first party. First party means what your company's at risk for internally. That can be forensics costs, figuring out how bad it is, public relations, the credit monitoring notification, and then the third party is your company's clients. What happens to them when something you've done creates a problem for them? Guess whose doorbell is going to ring? Yours. So those are the costs borne by your clients they're going to come after you for. So if you don't have third-party coverage on those right two towers, you don't have coverage and you don't have money to help you pay in the event that happens. So when we're looking at where to go, and I just put a little bit of a few of the carriers here. They are widely available. There are 50 more carriers. The marketplace is constantly evolving in cyber from an insurability standpoint. Again, though, we got to look at the policies and we got to look at the restrictions. Higher hazard classes, the marketplace is smaller, as I mentioned. And again, the sublimits and the policy warranties are huge here. A warranty is a requirement on the policy that you will do exactly what you said you do. And antivirus is a perfect example. CNA took a $14.5 million case to court to deny a claim to a company that had a huge hit. And they denied the claim in court because they didn't meet the policy condition that said you will religiously update your antivirus safeguards, and they did not the day they were breached. No claim. That's a warranty. You need to know if it's in your policy or not. And then HIPAA compliance. Basically, a lot of the med, malpractice, and professional policies provide some offerings. They're going to have typically low limits unless you buy a more complex product. Typically, the limits are $50,000 per physician up to a maximum of 10. So you might only have $500,000 of coverage from a notification standpoint. So here's an example of a policy that's actually got some of that built in. You got a cyber liability policy for $1 million. That covers if you're financially held responsible for other people's financial losses. That's not the credit monitoring. The privacy crisis management expense is the sub-limit that I talked about a moment ago. It's typically going to be capped at 50, 250. Sometimes you'll see 500, but they're all capped unless you go to a more complex designed policy. So also, sub-limits can be limited to a number of records. It's not necessarily always a dollar figure. It might be $250,000 or it might be 1,250 records. And by the way, your deductible is the first 500 records. So you've got to look at the policies closely. I mentioned the buckets here on the top right-hand slide, and you can buy integrated policies that have all four of those built in. Those things are going to include, in a lot of cases, regulatory defense, penalties, payment card industry fines, expenses, costs, and forensics. But they're going to erode that million the more you spend. And then if you're held financially responsible to others, you've got less. Target industries, obviously healthcare, financial institutions, software companies, technology companies, internet services, any combined hardware, software, business service providers. If you're in one of those type of situations, you probably want to look at the full encompassing packaged policy with some manuscript forms to get what you want. Typically, like I said, you're going to see $1 million aggregate, and that means you get a total of $1 million to spend on anything and everything. And, by the way, you're limited on your crisis response of $250,000, which equals about 1,470 records. And I'll give you a homework assignment before we leave that you can take home with you and do some of this math when you get back to your office. I mentioned what data breach costs include, and here's an example. It might be a little hard to read in the back, but incident investigation, and this is for examples for 1,000 records only. Investigation, 122, crisis management, regulatory fines and penalties, PCI fines, and then this little fun thing called a class action lawsuit. So when we look at that, those 1,000 records, just for the top part here, were $186 per record, not including the class action lawsuit. If you include that, because you're going to have to pay it, you're looking at $700 per record in the event of a breach where you're sued and held financially responsible. This is just an example. Could be better, could be worse, probably worse. It's a ticking time bomb. So pay attention to the math. I mentioned business interruption coverage and what that can cost and how that can hurt you. First-party business interruption is available. You have to ask for it. You have to know if it's included or excluded. And that's basically, if your system goes down, how much money do you not make that day? The third party is, how much money do your clients not make? So a great example, everybody knew about Amazon going down in 2013 because you couldn't get your G.I. Joe with a Kung Fu grip for your 4-year-old. So that probably cost them $66,000 a minute for the day they couldn't operate. Well, where'd they go? They went somewhere else and bought it, didn't they? And then they're probably a little worried about going back to buying for another week or two. Let's let that thing settle down first. So how do you choose? Well, let's talk about vanilla, more complex, and deluxe policies. And I'm going to really make this simple. This is not something you'd use to make a choice today, but the vanilla flavored are the ones that are the $1 million aggregate. I mentioned what an aggregate was before. Low sublimits, and that's why the prices are inexpensive. You're getting what you pay for. You get some coverage that you don't have now, but is it enough? The more complex policies are going to start adding higher limits. And once you go beyond $5 million, we have things that are called sublimits that stack. And what that means is once we go over $5 million, we have to buy additional policies to get higher and higher limits. Each one of those additional policies layers over the first policy. And if you ask the right questions with the carriers, you can get your sublimits to also stack or be additive for each and every layer you buy thereafter. So that can be a good thing. And finally, the deluxe value is the $5 to $60 million types of limits. These are the ones where you can look at first and third party business interruption being included in the total aggregate. So if you buy a $50 million policy, all of your exposures are covered up to that aggregate. So if you have first or third party costs that are borne by you, that aggregate can be used for that business interruption for you and your clients. I like to say it's like going to Kohl's or Men's Warehouse for a nicer product, or I'm going to my custom tailor in Hong Kong, right? They're the ones that are going to manuscript the policies. They're going to write in an endorsement that takes out the exclusion that you don't want in your policy, such as a warranty condition. Cyber market is moving every day from an insurability standpoint. It's a lot like employment practices liability insurance was 20 years ago. You didn't buy insurance for sexual harassment, discrimination. You just swept it under the rug. Well, laws have changed, and if you don't have that coverage, if you got more than 5 employees, actually more than 1 employee, there's an opportunity for you to be sued from an employment practice standpoint because, oh, you fired me because I was too old. No, I fired you because you never come to work. They still sue you, and you're still on the hook for defense costs. Employment practices evolved, and now you can get it easily. Back then, people were trying to figure out, how much do I need? Do I even need it? Well, cyber liability is like that now. And the reason you want to think about it was this thing on the left is called an IBM PC. I've used them. Maybe some of you have. The younger generation probably doesn't even know what that is. It looks like a doorstop. Evolving into smart tablets that are interconnected anywhere, anytime. Old rotary phones have gone to smart devices. So again, availability is there. Pricing varies. The bottom right of the slide, you'll see a $1 million policy with a $250 sublimit might cost you $4,000, $7,000, or $12,000, depending on who you go to and when you go to them and what you say and what you ask for, and what your class of business is probably the biggest driver. So a little bit about the highlights and summary of this. I know I've gone through it pretty fast. Market's not standing still. The carriers are still adding products daily, weekly, monthly. Capacity is available. And underwriting and understanding your policies is absolutely critical because you're going to get what you pay for. And if you don't know what you're paying for, you're going to get what you didn't ask about or not get what you didn't ask about. So my recommendation is go back home to your office, look at your exposures from a record standpoint, do the math, look at what's out there. How much do we want on a primary layer? Do we want higher sublimits? Do we want more than the 1 or the 5 or the 10 million? Then put that in place, monitor, review, and reevaluate because the market changes. Your number of records is going to change. You're going to grow. And if you're in a high growth mode, you need to keep your broker agent up to date on a regular basis so that they, in turn, can talk to the underwriter so the underwriter doesn't get surprised a year from now that, what do you mean you doubled in size? Ooh, I don't know if I want to be on that. We'll just give you what you had last year, and then we'll talk about it later. That's the wrong time to find out. So here's your homework. I printed this out. Basically, go back to your office. You don't have to do it, truly. go back to your office and look at how many records you have on file. Look at how many of those records include personally identifiable information and multiply by 170. That's your exposure. Dan mentioned third-party vendors, et cetera. I don't know if you knew this, but Target breach, oh, Target's bad, right? Well, you know how they got through Target? There was an HVAC contractor, and the credentials that the HVAC contractor used to communicate with Target were stolen from the HVAC contractor. That's the back door they got through. So review your third-party services, credit card processors, vendors, anybody that performs services for you that involve IT, document management, or any kind of invoicing or purchasing. Look at limitations that if they breach, look at limitations on their insurance policies, and look and see if there's any restrictions that limit them. I'll guarantee you they are limited, and you probably don't have much access to what they have. Look at waivers or hold harmless clauses. Look at insurance clauses that do not or do provide additional insurance status for you, and consult your legal counsel. Look at your downside scenarios, understand your policies, be comfortable with your cyber liability agent. So that's your homework. You don't have to do it now. And I think that's about it. I've got some extras. We won't go through this now about the red flag rule. That applies to financial institutions and creditors. It tells you a little bit about when you have to do it. The red flag rule was developed on or around 2007, I think, and was a spinoff of the FACT Act, which is the Fair, I always forget what that acronym stands for. It's the Fair and Accurate Credit Transactions Act back in 2003. So this stuff's evolved through legislation and now through the huge cyber event. So everybody's got to do it if you've got PII. Not legally necessarily, but you're going to have to notify in these states, and you're going to have to pay for it when somebody asks you to. Any questions? It's going to be where it was breached. So basically, let's say that I shop at Home Depot or a local restaurant, and I find out my information's been stolen from Home Depot or that restaurant. I'm going to go to the headquarters, whoever owns that, and that's who I'm going after. Even if they have a credit card third-party transaction service, I'm going to go to anybody and everybody. The lawyer's going to be smart. You saw the class action lawsuit, 509,000 for that 1,000 records. So multiply by 10, you got a $5 million class action lawsuit. They go after anybody and everybody. And first question answer gets a hat. Class actions. Well, I'm not a lawyer, but the class action's probably going to go to the headquarters. I would highly recommend either in-house or legal counsel that can review each and every state specifically. And California, a different state. New York's a different state. California has facsimile fraud issues. So if you fax something to anyone unsolicited in California, they can come back and sue you. I mean, it's crazy what they do there. So you need to know each and every state that you operate in. Yeah, because they can come through that door as well. The warranties, they're spelled out typically, and also when you get a quotation from a national carrier, they spell out, whether they're going through a broker or agent, any specific warranties pretty clearly in the quotation. So we can go offline and talk about that specifically if they're okay. All right. Well, we will hang around for afterwards, and thank you again for coming. Thank you from Wells and PNC Bank helping us put this together. Have a great day.